Hey everybody, hello and good morning. My name is Darius Anucauskas and I'm the global market analyst here at Markets.com, and today is Monday, the last week of April. So the 28th of April to be more precise. And I hope you're all having a wonderful start of Monday. By the way, this is a quick video preview for the webinar, which is going to happen in a few moments, so do not tune out. We're going to talk markets. We're going to pick up on a lot of stuff. So hey, hopefully you enjoy the session, and I'll see you in a bit. Alright, okay, ladies and gentlemen, welcome everybody. Hi, my name is Darius Anucauskas and I'm the global market analyst here at Markets.com. So, a little bit of a change of a scenery. Yes, we have a bit of a new office situation happening here, so hopefully, you'll enjoy the image behind me and the blinds. So look, ladies and gentlemen, I hope you're all feeling fantastic. I mean, look, last week we were kind of, I only ever ran one show because I was off, I wasn't feeling very well as well. So, but slowly getting back on track. Right, ladies and gentlemen. Like I said, it's a new week, it's a new start, but let's not forget that this is the last week of April, and well, it could be a bit of a volatile one as well. So. We're gonna jump into the markets. We're gonna have a look at what's happening. I'm gonna pick up on some charts, the usual basically stuff. If you're a regular on my show, but before we go into all that, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. Yep. Also, as well. Oh, before I go any further, as always, good morning in the chat room. Good morning, everyone. There we go. So, good morning, everyone. And by the way, whoever is joining in, feel free to ask questions if you wish, because that's the whole point of this live session. In order for us to have like a bit of interaction. Look, I keep on saying that if I know the answer, I'll tell you the answer. But if I don't know the answer, well, I'll say, you know what, I don't know the answer, but I will go and research it, and I'll try to get back to you in the next show. Look, also before we jump in, let's quickly mention our Markets.com website, which you can always check out for more information about us. So yeah, look. Let's jump into the charts. The first one, as always, is Nikkei 225. Excuse me. Occasionally, I will probably be coughing just because of my cold is still somewhere around here. So yes, straight away, apologies in the future. But look, Nikkei 225. So of course, at the moment, everything seems to be like stabilizing again. In general, April was a very big roller coaster ride, in my opinion. We started off with Liberation Day, where Trump announced his tariffs on almost all, I think all countries in the world, almost all countries in the world. Yep. This caused kind of the market to sell off rapidly. However, what we're seeing is a huge reversal. And for example, if you look at the monthly chart here on Nikkei 225, look at this candle. I mean, look at this. I mean, let me just zoom in here a little bit more. This is this candle. Yes, it seems like we're still in bearish territory here on the cash index. But oh my God, look at this. I mean, but in general, it was a fantastic move. I was aiming for this key area of support around 30,374, and look what we did. We traveled lower, we tested that area, bang, like rebounded from there and reversed back up. Of course, at one point we were losing around 15%. Now we're kind of almost flat. I mean, talk about a crazy ride. I mean, we had one like here back in August of 2024, where Nikkei also sold off heavily, but then we recovered. So again, I really hope you were on the safe side on this one. Maybe if you are trading Nikkei, I hope you didn't get like damaged or anything. But let's see what could happen next. So first of all, of course, from the technical perspective, we can see that we are still trading below this downside line taken from the high of the 24th of January. We're holding below the 50-day EMA, shown here as the green line. So in a way, it's providing good resistance, but I'm not saying anything. I'm still kind of leaning a little bit more towards higher levels because I think that there could be more kind of hype around the whole kind of recovery moment right now, that that everybody's happy, everybody's like we're getting some talks right now. It's like the US is saying, oh, we should ease off a little bit on the tariffs. China is also considering to remove theirs. It's like this kind of period, this stabilization period. And some might say, but hey, is this the perfect time to buy stocks or something like that? Well, look, I mean, we have the earnings season right now. We are in the earnings season right now, so be careful with that. But we'll get to that point in a bit. But first, let's deal with Nikkei. Purely from the technical perspective, I'm still kind of cautiously leaning towards the upside. I'm kind of leaning towards a larger even correction to the upside, but only up until this downside line or this 100-day EMA. If you can see it there, this is the blue line here. It kind of coincides nicely with the downside line. Now, the downside line is drawn from the high of the 24th of January, as I said, and it's a little bit on the tentative side, so it might not carry that much significance. However, if we do push higher, I think that we could see a little bit of a hold up here somewhere near this downside line, and then we could go from there. If it finds good resistance, okay, maybe a little bit of a retracement back down could be possible. I'll reuse this arrow later on, so I'll use something like this. So basically, you know what, I'm going to mark it straight away. So if we do clear the downside line, I'm leaning towards the upside. In terms of economic data from Japan, let's have a look. Nothing major on Monday, nothing major on Showa Day. We can see that Tokyo, Japan will be closed. Industrial production is coming out on Wednesday. Wait, just let me double check if Japan is going to be closed tomorrow. Let's take a look, because maybe this is something that I've missed here. Let's see. Let me just take a look. Yeah, I think there we go. So show day. So Nikkei is going to be closed tomorrow. And it's going to be very interesting to see how they're going to open up on the last trading day of the month, on the 30th of April. And if we do look at the stuff here that's coming out, so yes, industrial production, preliminary numbers, and retail sales, which I think that it could be quite important. At the moment, we're expecting a much higher number, almost double the number, or actually not almost, double the number on the year-on-year side. So we'll see. In that case, going into Thursday, G-Boom Bank, BOJ interest rate decision. That's, I think that on the 1st of May, great. I think, the BOJ is doing this step again, the first step, because again, we were going to have the FOMC later on this month, or sorry, not this month, in May, but I'll get to that in a bit as well, and I'll pick up on the US. But like in terms of Japan, unemployment rates coming out on Tuesday, but the main focus will be on the interest rate decision. As you can see, at the moment, the expectation is for the same rate to come out. But of course, we do understand that the Japanese economy is also going through some higher inflation numbers. And inflation started picking up, and we've noticed that. Picking up, it's like basically above like 3.5 at least, sitting there. So the BOJ's inflation target is around 2%. So yeah, it's I would say way too high, and the BOJ does want to go and hike rates. I mean, they've expressed their wish to do so before. However, will that be the case or not? we'll see. For some reason, I think that there is not going to be a move. I think that they're going to just go to stick to what the Fed is going to do, and they're not going to go for hikes at the moment. They want to see how this whole process with between China and the U.S., this trade issue, how it will progress further. I mean, if they're going to find some sort of common grounds, then yes, maybe the BOJ will be a little bit more comfortable to go and hike rates. But if they don't, if the U.S. is still stubborn, then you can't really go hiking rates here. You need to stimulate the economy, and you would have to make the lending cheaper. But again, let's see. For now, I think that the market is enjoying the moment just as it is. I think that there could be some more positivity here to come. Let's see what's going to happen here, but that's my game plan. If we suddenly somehow start drifting below the 35,111 territory right here, and we stay below that, I will consider a move a little bit to the downside. Let's have a look at China 50. China 50. This one's. I like this one. I like the Chinese index here, and it's showing good resilience in a way. So look, we climbed back above this downside line. We climbed back above all my EMAs, and we're still on the positive side. So in a way, I think that we can say that at the moment we will wait for this one to, I'm somewhat positive in general, because again, there could be some positivity between the US and China talks, but at the same time, I don't want to rush into things. I'm not really getting that optimistic. However, in the very, very, very short term, yes, there could be like an impulse to the upside. Everything is rosy again, and everything is beautiful, but again, the bigger picture is problematic, because let's not forget that the confidence has been shaken. The confidence has been shaken, and we don't know exactly how this is going to play out. So, because again, at any point, if something doesn't sparkle with the White House, they can just turn around and say, you know what, screw this, and we're just going to go back to whatever. Doing crazy stuff, whatever we want, and and this is, like I said, and that's how. And this is what the market is currently sitting on, and yes, great. I mean, we're seeing some positivity right now, but I think that this is just to kind of not to allow the stock market to collapse. But again, let's see if we can go somehow for new highs, then okay, that's great. But at the moment, I'm taking a very careful approach. In terms of economic data from China, from Monday, let's have a look. Nothing major. Tuesday, NBS general PMIs, manufacturing PMI. Ties in manufacturing PMI. Okay, this is what's going to be interesting, because we have an issue here. We're seeing a possible drop into contraction territory. There we go. Okay, so we're expecting a drop below 50, so into contraction. So basically no longer in expansion territory, and not good in a way, not good for China to finish off the month this way. On the first, most of the markets will be, a lot of markets will be closed. China as well, so keep your eyes on that, that there might not be much action. And on Friday, there's not much action in general. So, right, okay. Let's have a look. Of course, we'll see what's going to happen. I mean, on Friday there is action. It's just not from China. We do have the small little number called NFP coming out, but I'll get to that in a bit when I'll jump into the U.S. indices. So U.S. index, Dow Jones Industrial Average. Look, I talked about this last week, and I said to you, first of all, from the technical perspective, I am watching this very carefully. We're currently kind of oscillating around that 40,000 zone, and it's on the cash index, and this is becoming like this area which we're just, like I said, moving around it, and we're not really going anywhere. Yes, here and there, up and down, but not really without any clear direction. Because again, the same story. Markets are worried. Markets don't know what to do yet. Yes, in the short run, given that there are, like I said, there are also earnings coming out. So yes, everybody's kind of, happy with that. But in general, yes, everybody's on standby, and and the Bears are actually also on standby. They're not like they didn't go far into the bushes. No, they're somewhere running around on the field. It's just they're not attacking yet. The Bulls are also being careful and cautious. I think that we need some more clarity, on the political arena, from the political side. But what can I do here, for example, and what could we do here is that if you're looking at this picture here, I have this little short-term downside line, but to be honest, it's a little bit on the tentative side. I'm not really. I mean, you can keep it, but it's something that I'm trying to find something, some sort of logic, some sort of explanation, kind of to give me like an opportunity to aim for this other downside line, which is taken from the high of the 20th of February, and this one is also, it could be coinciding nicely with the 50-day EMA. Overall, you can see here that the 50 crossed the 200, and it seems like we're waiting for the 100-day EMA to cross the 200 as well. But again, let's not rush into things. In general, if you look at this picture overall, you can see that we had a moment before where the 50 crossed below the 200, but then the 100 didn't cross, and then we had a reversal, and look what kind of rally we had. So that's what I'm saying. So we are getting that cross right now, but we don't have the 100 still below the 200-day EMA. So that's why we're waiting. We're playing a little bit the waiting game here, so we're not going to rush into things. But again, I'm in the short run, I'm considering maybe a little bit of a move higher in terms of economic data. Now, of course, as I said to you that on Friday we're getting the NFP, but before Friday, let's have a look if we are getting something else. Dallas Fed manufacturing today coming up, very important. Keep your eyes on that one. Dallas Fed manufacturing at the moment, the number is. The previous number was at minus 16.3. Okay, let's have a look if we can refresh the calendar here very quickly. Okay, so this week, let's have a look at this week. So, okay, if I can get like some sort of a forecast here. So, okay, the expectation is for a little bit of an improvement of minus 15. Right, okay, this calendar doesn't show it here. That's absolutely fine. But going further, going into Tuesday, goods trade balance, okay. House prices, JOLTS, of course, we have the job numbers. So Tuesday is going to be JOLTS, Wednesday is going to be ADP, and then on Friday we're going to get the NFP numbers. But the JOLTS job openings, look, the expectation is for a bit of a decline, and okay, well, let's see how much we're gonna get, like if we're gonna get that decline in general. If we do, then hey, maybe we could see a little bit of a drip back down. But in general, look, this is where my technical piece comes in very nicely, because I rather wait until we sort ourselves out here in between these two little short-term trend lines, and then kind of clear one of those, and then consider the next short-term directional move. In terms of other economic data, Wednesday, let's see how we're going to finish off the month. With kind of data, we'll see. We'll get the ADP, of course, which is expected to come out on the lower side right now. And we do get some GDP sales, right? Okay, some other, but I think that everybody's going to be watching this one. By the way, I keep on saying to everybody, look, try not to gauge, or try not to compare ADP to NFP, because again, they are similar, but they do move separately in a way. So there's no direct correlation between those two. Let's have a look at the S&P 500. So this one's looking a little bit more promising, and this one looks a little bit more positive, and I have to stick to my words, which I mentioned last week, that if we do clear this downside line, my next target is the 50-day EMA together with the other EMAs, the 200 and the 100, and then we'll go from there. For the downside, yes, a drop back below the 5,385 territory, somewhere around here, or actually even, no, you know what? No, I think this is already old news. This hurdle, I think we have to take a little bit of a different approach here. So basically, I will keep an eye on the downside from this little territory. There we go. If we do fall back below the downside line, okay, that's fine. That's one step. But then after that, I would prefer actually to wait for a drop somewhere below this little territory, this area between the 5,310, 5,325, 26 levels, somewhere around here. And then we'll go from there. The S&P 500, NASDAQ. So yes, also looking quite positive, to be honest. This one has reached the 50-day EMA, but then, to be honest, I mean, look, we're struggling with it, but okay, if we do clear the 50-day EMA, I'm going to go a little bit more to the upside, because as you can see, I have drawn my Fibonacci retracement here from the highest point of February to the lowest, or should I say, the highest point of this year, the current highest point of this year, the current lowest point of this year. So I've drawn this Fibonacci retracement. So far, this 50% is acting as a good area of support. It did previously act as a good area of resistance, now support. Let's see if we can, we can pop above this 50-day EMA, and then if so, my next target is the 200-day EMA. Very simple. So in the leap, there we go. In terms of Thursday, in terms of economic data from the U.S., ISM manufacturing PMI, very important. We can't get out of the contraction territory, and on the contrary, we also are expecting this one to actually drift further into negative, sorry, not negative, but into contraction. Look at this. I mean, we're moving further away from 50. If by any chance it pops back above 50, I mean, this could actually play out quite positively for the indices. And of course, Friday's NFP is on everybody's mind, and yes, we're going to be getting some data here. Non-farm payrolls, 130. Also expectation for a lower number. Let's see what's going to happen. But what I'm interested actually right now is going to be this previous number, because that was quite on the high side. If somehow by any chance this gets revised to a very low number, ooh, that could not sparkle well with the bulls here, and the bears could take control easily. Actually, also wanted to pick up on the earnings, because again, we are getting some big companies this week. Last week we had them. Let me just filter this out very quickly, by market cap. There we go. Yes. So let's have a look. There we go. That's so Monday. Let's have a look. Who do we have? Let me just filter this out. The U.S. Let's keep the U.S. companies. Yep, there we go. Wait. Let's add Europe as well. I think that the European Union, we do have major companies reporting as well. So Monday, market cap. Let's. There we go. So PetroChina is coming out. So yes, waste management coming out. There we go. Also, can we filter this one out? No, we cannot really do anything here. Okay. Tuesday, let's see. Visa is coming out. Okay, that's important. Coca-Cola is coming out as well. That's something to keep in mind. Companies like Booking, Pfizer as well, so coming out. So yes, keep your eyes on that one. Wednesday, we're gonna get Microsoft. Yep, the big players here coming out on Wednesday. Microsoft and Meta, if I'm not mistaken. There we go. Yes, Meta platforms. So keep your eyes on that. So both are reporting after market closes. Qualcomm, if you are trading that. Thursday, we'll have Apple. That's on everybody's mind as well. Apple and Amazon are going to be coming out. Eli Lilly, yep, as well. MasterCard. Look, McDonald's as well is coming out. There we go. We do have some big companies coming out. Yes. And Thursday. Oh, sorry, that was Thursday. Friday. ExxonMobil. There we go. Chevron, some big oil companies. Shell is coming out. Yep. So look, it's gonna be oil day for us on Friday. So we'll see how oil will play out. But I'll jump into commodities in a bit. Let's have a look at the dollar index very quickly. Dollar index is recovering. At least it's showing signs of recovery. And it seems seems like it wants to form something like on like an inverted head and shoulders pattern here or something like that. But look, I will say it this way, that I would prefer to wait for a push back above this upside line, which is kind of taken from the lowest point of July of 2023. If I can get that move, then I'll consider some higher levels. Up until then, there is still a chance of basically something like this happening. Let's jump into Europe. I mean, DAX is on fire. Look at this. I mean, look at this. At one point we were selling off. I mean, quite rapidly. This in the beginning of this month, it was just nightmare. So we were. This is the opening of the month here. So we were at one point already losing, wiping out all the gains. We were in negative territory by 7% for the year. Look how quickly everything changed. Boom, there we go. We're now back in double digits. I mean, in 1 month, look at this roll. Look at this V shape. This is really, really terrible in my opinion. Of course, if you're on the right side, if you're on the correct side, congratulations, well done. But honestly, it's really difficult if you if you have like small accounts, small trading accounts, and if you're if you're holding a position, you are trying to hold a position, this is just not the best moment to do so. And look at this. I mean, on one hand, you're thinking one thing and it's gonna start selling, but then it's like it's a little bit of a mess. Now the question for me right now is, can we go for a new all-time high? And of course, there is a strong chance for this one to go higher still, but I would prefer to wait for a push above this barrier. Look at this 79% on the Fibonacci retracement. Not the most popular number, I would say, but you can keep an eye on down as well. Also, if you're not comfortable with that, you can keep an eye on the high of the 1st of April. So basically the high of April is near the 22,573. If look at this, I mean, we still have 3 days left, so I'm not really excluding the possibility of this one actually popping higher, maybe creating a new high in April, because if so, I mean, this market is just insane, and that's why it's becoming difficult for investors to kind of to have like a cold head on their shoulders, because again, there's way too much emotions here involved, and I think that this is what's not really helping the investor morale. Look, I would say it this way, long story short. For now, I'm on a little bit more on the positive side. I'm leaning towards the upside, especially if we start clearing the 79% here on the Fibonacci retracement, which is drawn from the high of March, the highest point of March to the lowest point of April. And let's see if we can create a new high for April, ladies and gentlemen. Finally, UK, just a final index here. So we've approached this downside line. Now, this downside line is a little bit on the tentative side. I don't know if it's drawn this way or maybe we need to draw it that way. It's like I said, it's a very tentative one. So I would say for now, there is still a chance for this one to pop higher. However, I need to see a break of this downside line first in order to get comfortable with some higher levels. Let's jump into the Forex world very quickly. AUDUSD, of course, our risk currency, Australian dollar, is loving the moment right now. But the fact is that here against the US dollar, we don't know who's gonna outweigh who, because again, US dollar is having a good moment right now as well, because it seems like that the tariff war could slow down a little bit. That's the positive news. However, will that be the case? Time will tell. We have to go into May, and as you know, in May everybody has this phrase, sell in May, go away, and let's see if that's going to be the case this time or not. But something tells me that I think that there could be, again, maybe, like I said, maybe the Fed situation will not help, because again, we know that the Fed currently is expected not to do anything, not to go for any cuts this May meeting. We can see that the 89 probability here, 89% probability that we're going to keep the rate the same. And despite all the pressure from the White House that we saw recently last week, actually. So yeah, I mean, I think that, like I said, we need to be very careful for now. I mean, on one hand, we could be back into risk-on environment, but as I said already, the market has been shaken and the investor morale has been damaged. So let's not forget that. So I would say just don't rush into this. If we see the US dollar weakening sharply, then look, I mean, this pair could really make a nice move to the upside here. AUDJPY, similar story. We still have some room up until this downside line. Our risk on, risk off monitor here, this pair. At the moment, everybody's kind of, jumping off Japanese yen. That's fine. That's all okay. But hey, at the moment, like I said, I'm watching this downside line. If it provides good resistance, another decline here could be possible. NZD/USD, certainly, AUDUSD is something that I'm going to keep a close eye on. Let me just double check very quickly. At the end of the month, by the way, at the end of the month, we'll have the RBNZ interest rate decision. And at the moment, there's no forecast, not really, but I think that, or actually, let me just double check if there's, yeah, at the moment, the problem is, let me just see if I can get some data for the end of May, next month. So, like I said, the announcement, the interest rate decision from RBNZ is on the 28th of May. Yes, I don't have any forecast yet. The previous number was at plus 3.5, so we'll see if they will go for a lower number or not. However, I think that maybe they could actually take a little pause, like Australia, like RBA, which, by the way, interest rate decision announcement is coming out on the 20th of May, so keep that in mind. Yeah, looking at this picture again, everything will depend on the US dollar, but I'm not excluding for a little bit of a larger correction back down. Look at this Fibonacci retracement, which is drawn from the highest point of September of last year to the lowest point of April, and it worked like a charm. 61.8. Fantastic. I think now we can actually redraw this one a little bit and we can reuse it right there. I think that this is quite logical, and I think I'm going to stick to that. So for now, I'm leaning a little bit more towards the downside, not maybe even towards the 200-day EMA shown as the white line right there. If it provides good support, a nice rebound could be possible. USDJPY. So yes, we're seeing some positivity. The stock market seems to want to recover, and that's why everybody's picking up on the US dollar and kind of abandoning the Japanese yen. Look, what can I say? For now, it's I'm going to lean a little bit more towards the upside, but only up until 144.55 zone right there. I talked about it. I said that if we do pop above the 142 zone, I'm going to lean a little bit more towards the upside here, but only up until 144.55 zone, and then we'll go from there. US dollar against the Canadian dollar, of course, we're also there we go. Actually, by the way, this is working like a charm, at least it seems to be like. So basically, I talked about last week about this falling wedge pattern, which according to all the TA rules tends to break to the upside. Now, at the moment, this is working. However, I need like some maybe stronger confirmation. As you can see here, somehow this 1.39 is providing good resistance. If we do get a nice pop above this area, I'll go higher. In terms of economic data from Canada, let's have a look. Friday, because we have the US job numbers, that's of course going to be the mover of that pair. But let me just have a look at Canada. Canada, does it have anything? Nothing major, to be honest. I mean, that's coming out from Canada. No, this one's a little bit on the quiet side in terms of economic data from Canada. USDCHF, yes, there we go. Finally, some breath of fresh air for the bulls here, because honestly, I mean, this currency, the Swiss franc, really destroyed the US dollar during April. And I mean, oh my God, look at this. This was spectacular. We found support near the 0.8038 and then we rebounded. So now the question is what's going to happen near the 0.8332 or even better, this upside line, which is drawn from the low the 28th of December. So that's something that I'm keeping a close eye on for now. If we do get a nice little hold up here, I don't really, how to say it, I don't really exclude something like this again. Maybe we could see another decline. Euro USD very quickly. Euro USD is, yeah, it's in this little retracement, which is fine, which is okay, to be honest. I'm not really, how to say it, not really expecting anything else at this point. For me, the upside scenario at this point, I would really need to see a clearance of this highest point of April near the 1.1573. If we can get that move, amazing, I'll go to the upside. Your JPY, this one's looking a little bit more positive, so I'm leaning towards higher levels. Last week, if you remember, I talked about this. I said that, look, if we continue to trade above all my EMAs here on the daily chart, I will continue targeting the upside. Yep, very simple. EURUSD, just wanted to quickly look at this one. A little bit of a mess here, to be honest. We're stuck in near the EMAs, and yeah, this is not really working out nicely, I would say. I would prefer to wait for a push above all my EMAs in order to go to the upside. Let's have a look at GBPUSD very quickly. This one's a little bit better than the Euro USD, and that means that Euro GBP is yeah, it's taking a hit. So it's so far so good. So GBP USD looking good, but again, prefer for further upside, I prefer to see a push above the 1.3434 zone right there. That's the highest point of September of 2024. In general, I think that's the highest point of 2024. If we can clear down, great. More buyers could join in. Let's have a look at gold. Yeah, there we go. Jumping into my commodities. Looking at gold. Okay. I would say this way that yes, we're having some improved we're having some improvement in the relations between the US and China. And maybe that's where this negativity is coming into gold, because maybe everybody's getting a little bit more optimistic. However, I would say don't rush into all this. I mean, yes, we had a very parabolic move here on gold, like from this the lowest point of April to the highest point of April. We already retraced 38.2, so that's absolutely fine. I'm leaning towards that 50% here on the Fibonacci retracement. I like that area. As long as we stay below the 3,292 territory, I'm going to lean towards that 3,228, and then we will go from there. That's my game plan here for now in gold, because my preferred scenario for the upside is from around here, somewhere from around this 3,000 kind of 3,300, and let me just zoom in here a little bit. 3,372 territory. Yep, that's roughly around there. Yep, around here. So if we do clear down, because as you can see, that area provided strong resistance on Friday. If we can jump above that, I will go for some higher levels. Silver. Let's have a look at silver. And silver is a little bit annoying here, to be honest. I mean, we're above all my EMAs, but we're currently seeing a little bit of a retracement. That's fine. So look, I'll say it this way: as long as we stay above all the EMAs here on the daily chart, I will continue targeting the upside. I need to get rid of this Fibonacci, no longer needed. So if we do start falling below the 50-day EMA, I'll slowly aim for the 100-day EMA, and if that gets cleared, the next target is the 200-day EMA, and then we'll go from there. Oil, jumping into oil. So I talked about oil, and I said to you last week as well that, look, I'm still bearish. I'm still bearish because there's a lot of factors. Also, if you want to check out one of the pieces here I did on on oil. Oh, where was it? Oh, was it on? Yeah, it was on YouTube. Sorry, yeah, there we go. It was the latest one that I did. So more downside for oil. You can check it out here. It's a good piece in my opinion. Let me know in the comments what you believe, what you think. But hey, like I said, it's the outlook is still not very positive unless certain factors get kind of improved. So the whole China-U.S. relation. I mean, a slight drop in Chinese production as well. That's something to keep in mind. We also saw the where's that? Tizen, is that coming out? Yes, there we go. So it ties in manufacturing, which is coming out on Wednesday. We're seeing a drop in, we're seeing a contraction. So, like I said, there's a slowdown, economic slowdown in China a little bit. There are some OPEC plus members who are continuing to create more output. So that's also flooding, the supply, and also the situation with Iran, where we could be seeing some deals done. If I can say it this way, we're expecting to have some deals done, and if we're expecting to see. Maybe we could see Iranian oil jumping into the market as well for more, for more market participants to be available. So look, there's a lot of ifs, of course, and this is like, and that's why investors don't really want to jump into oil that much yet. So we're being a little bit on the careful side here for now. The same. So, and looking at this little picture, I mean, this looks like a nice little bearish flag, to be honest, to me, and especially on the weekly chart. Look at this. I mean, so. Look, I'm not saying anything yet, but if we do break this upside line, the lower side of this little veg pattern, then we'll consider a move lower. Natural gas, let's have a look at this one. This one's in the nice falling veg pattern. Now, according to all the TIA rules, such patterns tend to break to the upside. However, while we remain inside the pattern, it could still drift lower. And yeah, I'm not really, like I said, rushing into anything yet. It could be nice later on, but confirmation breakout is still needed. Let's have a look at coffee. Coffee is nice. So I mean, not only coffee is nice, but coffee futures are nice as well. So we cleared the downside line. We tested my 411 zone. Perfect. I mean, can't complain. This is what I talked about, and I said that last week that if we do break this downside line, I'm going to aim for this one. Magic, just pure magic. Now the next step is to see if we can clear this barrier, the 411, and then go for the highest point of this year near the 440 zone, and then we'll go from there. Wheat, just have a look. Nothing's happening there. Sugar is trying to climb back up, but struggling. So okay. Not getting very comfortable with the upside yet, no, because I don't know, like not at this point. This is a way. It looks attractive, but again, I need some more confirmation. Cotton, I love cotton. This is a very nice, interesting kind of commodity here, and nice movement, I would say. So we cleared the 100-day EMA, and we ended up testing the 200-day EMA. Nice, mission accomplished. Now what's next? Next is if we can clear the 200-day EMA, I will consider a move a little bit higher here, and I will go for that 72 zone, which is basically marked near the high of the 29th of November. Let's jump into dessert right now, the crypto world, Bitcoin. So the cryptos are enjoying the moment right now, and as you saw recently, I mean, we got these nice rallies. Look, the positivity is coming in from this new established company, 21 Capital, which basically holds a lot of Bitcoins, and it's a joint venture between SoftBank, Tether, if I'm not mistaken, and what's this company name? Cantor. So yes, basically it's a joint venture between those, and yep. what can I say? It's like creating, it's creation of, let's say, it's like a fund which will allow people to invest into it, and kind of it will create some Bitcoin products, which can be invested in, and it is kind of going around the whole Bitcoin ETF thing. So that's where the interesting bit comes in. So we're, of course, at the moment we're observing everything from a side, because yes, it's a big thing. It's adding more value to Bitcoin, because again, it could become quite, how to say it, it could become quite popular again, if it's not already. But of course, it could just get some more positivity. That's what I'm trying to say. At the moment, I mean, we saw the recovery, that we saw the retracement that we had here back to the 75,000 zone. So now we're trying to climb back to 100,000. At the moment, I'm not going to rush into things yet. I'm going to lean a little bit more towards the upside, but only if we do pop and stay above the 95,000 zone, and then we'll go from there. I don't want to rush into things, like I said. If we do clear the 95,000, I'm going to go for the 100,000. But at this point, I'm not going to, let's say, ignore the possibility of a little bit of a retracement back to the EMAs. Bitcoin Cash, good result here, but this is what I'm saying. So Bitcoin is still holding on, but Bitcoin Cash is showing a little bit of sign of weakness. However, weakness could be opportunity for some bulls here, but again, like I said, I don't want to rush into things yet, because I'm looking at these EMAs. We're holding above some of those yet still. So, but I think if it starts falling below the 50-day EMA, I'm going to consider a bit of a move to the downside, and then we'll go from there. Ethereum, very quickly on Ethereum, we cleared the downside line, but the problem here is that yes, some positivity kicked in, but we remain below all my EMAs. So let's put it this way: as long as we stay below all the EMAs, there is still a good chance for this one to drift like this back down. However, if we start climbing above the 50-day EMA, then I'll slowly aim for the 2,120 zone, somewhere around here, and then we'll go from there. Ripple is testing the downside line. That's great. This is a tentative downside line taken from the high of the 16th of January, but we're currently holding on here. Yes, we're trying to break it, but 2.37, I said before, that's the little hurdle that I'm going to keep an eye on still. If we can get that move above it, I'll go higher. Litecoin, one of my beloved ones. Look at this. It's really, really willing to go higher. But I need to pop above this 50-day EMA in order to go to the upside, or even better, a push above all my EMAs here on the daily chart. Dogecoin, very quickly. Dogecoin, a little bit of recovery, but still below all the EMAs. There's still downside pressure. You can see the 100-day EMA wants to cross below the 200-day EMA. So if it does that, then we could see a little bit more downside on this one. And Polkadot's looking good. The level 4 kind of has been seen as a good area of support. And look, again, the same story with the EMAs. Unfortunately, I need to see clearances of those in order to get comfortable with the upside. And finally, Tron, something that I started looking into. I need a clearance of this. I like the technical picture here, but I need a clearance of the 0.2570. If I can get that move, great, I'll go to the upside. But I'm still not excluding the downside scenario. But for that, I need to start seeing a shift at least below the 50-day EMA. Ladies and gentlemen, that's a wrap. That's a wrap. Thank you very much for watching and listening. I really appreciate your time. I hope you enjoyed this session. Look, like I said, these sessions are these are longer ones, and these are made for you to maybe jump in and ask questions if you wish. So you can always do that. So hey, you can not only during live session, you can also drop a message, after this video is thrown out on YouTube. It sits there as a recorded session. You can drop a comment, and I'll pick up on the next webinar. So the next webinar will be on Wednesday, but I also have to tell you that join sign up for the webinar, which I'm going to hold later in the evening on Wednesday, and you can get more details in the description below. I'll provide you with those, and yeah, we'll go from there, ladies. You can check us out on Instagram by the way as well. You can check out more. There's more information on Instagram. You can have a look, and hey, tune in. I think we're gonna have a blast. In my opinion, it's gonna be live examples, live scenarios in the market. So hey. We'll see how that goes, but and there you can also ask questions as well. This is going to be a live session. Thank you very much, everybody. I'll see you on Wednesday. Bye bye.